at the end of the day, they became so greedy and wanted to make money and use houses that they had no intention of ever living on to become rich. At the end of the day, it's going to come back to bite them in the ass, and they're going to have to sell off those houses just to get rid of those properties. Otherwise, they're going to be losing money in mortgage every month. So I say, hold on tight, okay? The economy is the great equalizer.
A crash in the Airbnb market is going to cause housing markets to crash further. And we're seeing Airbnb occupancy rates just plummet. There's not enough people traveling to these cities anymore, and there's too much supply coming on the market. And that means certain Airbnb and short-term rental owners, they are now having to sell their properties because they are not making enough money.
There's an Airbnb collapse going on. Revenues are down nearly 50% in cities like Phoenix and Austin. Watch out for a wave of forced selling from Airbnb owners later this year, and the area is hit hardest by the revenue collapse. What's scary for the US housing market is just how many Airbnbs there are. There's about 1 million Airbnb rentals compared to 570,000 homes for sale. This will create a huge home price downside if Airbnb owners elect to sell. This Airbnb crash was to be expected. The pandemic is over. Few people are vacationing and working remote. So the demand is now way down just as the supply is way up, so you get a crash.
Lots of houses that were bought up by investors, whether they were Airbnb investors or long-term investors or Wall Street investors over the last several years. And lots of that supply is sitting in what I call shadow inventory in the background of the market. And lots of it is now vacant. You know, some of these owners are really struggling to rent their properties, whether it's a short-term or long-term rental. And I think at some point in the next year or so, we are going to see some of those vacant rentals hit the for sale housing market.
We got our friends at Airbnb who are in the midst of a huge collapse.
Ain't no way.
So if they have seen a dip in revenues are down 50% in cities like Phoenix and Austin. Their stock price from year to year is down 30%. So let me give you guys a quick supply and demand lesson, okay? So look at this pen. If this was the only pen in the world, okay, the supply is low. So because the supply of this pen is low, the demand is through the roof. I could sell this for $3 billion, right? Because I have the only pen in the world. Now let's come back to reality. Everybody owns a pen. Everybody has hundreds of pens. So guess what? Pens are worthless, right? Maybe 10 cents a pen, not worth shit. Let's apply that same logic to the housing market. Let's go back to 2020, okay? So in 2020, there was a worldwide pandemic going on. Shit was crazy. Basically, because there was a worldwide pandemic, niggas couldn't work, there was a rent freeze, et cetera, nobody's gonna buy a house at that point in time. So what happened? It became a buyer's market. Houses were cheap because nobody wanted to buy a house during a worldwide pandemic when nobody knew what was really going on. People couldn't pay rent. People are not gonna be able to pay a mortgage, right? So houses were cheap. So guess what happened? Just in case you need a little bit more reason to hate the corporations in your life, corporations and investors came all out of the woodworks buying up houses. Eddie, did you know this? Check it out.
All right.
Did you know that 1 in every 4 houses is owned by a corporation in the United States?
What?
1 out of every 4 houses, 25% of the homeowners in the United States, well, I'm gonna stop clicking that. 25% of all homeowners in the United States are corporations. They own the houses.
It's a person. Okay.
Right.
I didn't know that. Okay.
They're corporations. And guess what they use it for?
Leasing?
Right. They use it as
Renting?
renting properties. Absolutely.
I would assume.
They also bought those houses really low during COVID, and then they fix them up, resell them to people who actually want to live there. But these investors in these corporations never had any intention of living in these houses, right?
Okay.
They either flip it, or they use it as rental properties, or they use it as Airbnbs, right? So they took advantage of the fact of the low prices of the pandemic, right? But now that the world is kind of getting back to normal, right? Because all these houses were taken off the market, the supply is down, so the demand is up. So that's what you see now, where a lot of houses are expensive. It became It became a seller's market because there's less supply, so there's more demand.
As real estate investment groups buy up houses in cash and rent them out, in some cases, to the very families who dreamed of owning them. In January, 33% of all homes purchased in the U.S. were bought by investors, often Wall Street-backed companies with multi-billion-dollar funds. Times in recent weeks, they've been outbid by investors with all-cash offers.
It can be, discouraging when you get overbid by, companies.
How do you save when you're spending $2,200 a month just to rent?
So
not Florida, Lord.
So because of that, guess what also went up, Eddie?
What?
Rent prices. Rent prices have surged as well.
So basically, the cost of living has gone up.
Exactly. Ding, 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 ding. The cost of living gone up because these corporations, they fuck us all in the end. But number one way to build wealth, any investor will tell you this, is buy a house, right? Well, you can't buy a house, right? Because it's a seller's market and it's very competitive. And I know you've all heard it. Your grandpa, your grandma, your mom, your dad, whoever is saying, why don't you, get married and go buy a house and why you still live in an apartment? Why you still live in a home? And they don't understand, hey, it's expensive to buy a house now because of the fact that there's not a lot of fucking houses for sale.
Yeah.
And because the housing prices have gone up, the rent prices have gone up, the cost of living has gone up and also the property value has gone up because of all the other houses around you being sold for $1 million. Guess what? You're a millionaire. You got $1 million home now, big dog. And so what's happening now is because the pandemic is over, things are going back to normal, right? A lot of people just said, hey, we're just not going to buy a house. We're not going to sit on. But even more so, Airbnb became popular because of COVID, right? When we travel, we didn't want to go to maybe a resort where maybe someone was immunocompromised, maybe our party wasn't vaccinated, maybe it was unsafe, so we all stayed in the same house and we kind of controlled things, right? Those short-term rental properties were a really hot trend and fad, and they were bringing in money. They was making money off of our backs. But now that things have kind of returned to normal, people are going back to resorts and not doing that short-term living anymore, right? They're not doing it. And so right now, a lot of these investors, they have these houses where the demand has gone down and people are not going to Airbnbs anymore. And right now they're losing money. So a lot of people are saying that this could be, hey, a quote unquote housing crisis on our hand. And let me tell you why it might be a housing crisis. Okay. I know we don't really talk about the serious shit, but I'm gonna use my degree today. Fuck y'all. Anyways, so right now, as of right now, there's about 570,000 homes in the United States that are for sale, that are not owned by Airbnb or that are not rental properties or owned by a corporation or Airbnb. Eddie, do you want to guess how many homes are being operated as an Airbnb? If 570,000 that are on the market right now are not owned by Airbnb, can you guess how many are?
Probably 500,000.
Oh, not quite.
What?
So 570,000 homes that are listed right now are not an Airbnb property. 1 million are. 570,000 homes as of today, Monday, July 3rd, that are being listed are not Airbnb properties. There are 1 million Airbnb properties in the United States. And because Airbnb is tanking, those 1 million properties may be forced to sell. Now, I don't know if they're going to hold out, but if Airbnb tanks and goes under, you talk about 1 million houses that are now on the market, that are now possibly going to be on the market to be bought.
Yeah,
so let's go back to my supply and demand example.
Okay.
Now, there's about to be a whole lot of supply of houses on the market, which means the demands are going to go down. So which means the houses that are now looking expensive, hold on tight, those prices are about to drop. Because so many new houses are going to come on the market, it's going to become a buyer's market.
Hey, time to buy a mansion.
At the end of the day, they became so greedy and wanted to make money and use houses that they had no intention of ever living on to become rich. At the end of the day, it's going to come back to bite them in the ass, and they're going to have to sell off those houses just to get rid of those properties. Otherwise, they're going to be losing money in mortgage every month. So I say, hold on tight. Okay. The economy is the great equalizer. Because I know for our generation, millennials and Gen Z, it's very difficult to not only buy a house, but to be able to afford rent, especially
difficult
if you
live.
Right, especially if you live in those really expensive cities like New York, like fucking LA. It's really expensive.
Good luck out there.
And I know how difficult it is, but I do think that, I'm no economist.
You think there's a silver lining out of all this?
I think the silver lining is I do think the market is going to always. I think the market always has a way of adjusting itself. What's up, y'all? I'm Keith.
This is your boy Eddie.
And I appreciate you guys. Let's shoot it again. I messed up. What's up, guys? I'm Keith.
And this is Eddie.
And we want to say, guys, we appreciate you guys watching this entire video, and we would really appreciate it if you would
like and subscribe.
Okay, that was my line, but we appreciate it if you would like and subscribe. There's more coming where that came from. If I said that right.
Yeah.
We're coming with that. Anyways, thank you for watching the video. Please like and subscribe. We will see you next time.